Hello.
Yeah, you
We
now.
are back. We are back into the cocoon room. We have a special guest tonight, so absolutely. Let me introduce myself. My name is Amaru,
Hi, I'm Candace. Welcome to Black Butterfly. We're in the cocoon room.
and we would like for our guest to introduce himself. He is a insurance broker, and so go ahead.
Hey everyone, I'm Derrick Anderson with Midwest Legacy Group. Just here to share some information and give some insight.
All right, cool. We glad to have you. This should be a interesting show, for to say the least, because back it was like a couple months ago. It was a lengthy discussion around insurance, and so I know that was Candace's background, and so we wanted to have someone who was specifically in that field. And so obviously, I'm gonna learn a lot. Right? I know a little bit about life insurance here and there, but it's always good to learn
Right.
and be educated. Before we start, I always ask for opening thoughts. Any opening thoughts?
I actually don't have any opening thoughts, but I do want to let everybody know that Derrick is a Gary native.
Yes.
So we love having people and experts come on that is originally from our hometown just to see how they have a progress through life and see what they've been up to. So welcome. We appreciate you for coming on.
And
Oh
Derrick,
yeah.
any thoughts?
I would say if any thoughts, I would say to keep it a positive mental attitude, man. Positive mental attitude goes a long way in anything you're doing in life. So definitely, want to put that out there. Some positive vibes in the atmosphere.
Absolutely, I love that. So as we pivot to the show, we always go through our I would say our procedure. I wouldn't say procedure, but it's this order of things that we like to do. And so as we get started, I would like to give it over to Candace and give our scripture today.
Okay, guys. So the scripture of today is it's from James 1:4. Let perseverance finish its work so that you may be mature and complete, not lacking in anything.
What does that mean to you? Because you got to explain yourself. You just can't give scriptures and not explain yourself. Come on.
So I chose the scripture because when we talk about perseverance, I know oftentimes, we have things that happen to us in life, and it is so easy to kind of like stop and say, I'm tired of this and I give up, and if we talk about it in psychology terms, it's, fight or flight. People fight for so long, they get in a space where they fight for so long, they just get tired, then they flight. And so I just want to say that persevering is continue to keep going, even when you have to face adversity, even when you have to face barriers, you have to continue to push through. So I think perseverance is really big. It has always been really big for me. And so that's why I chose that scripture.
And so to go along with that scripture, you also chose the word, like you said, word of the day, obviously, was perseverance. I'll give the Swahili interpretation. I forgot how to pronounce it. Uvu Malivu. That's how you pronounce it. Uvu Malivu.
Okay. And so perseverance in doing something despite difficulty or delay in achieving success. So again, if you've had any like struggles and you feel like you want to give up, don't. Just keep going. It doesn't, everybody takes a while. Sometimes it takes a while to get to the finish line, but as long as you're doing something each day and you're making progress, it takes some longer than others, but as long as you get there, you get there. It's kind of like not really a race, more like a marathon. You gotta always have somebody to hand the baton off to.
So right. Joey Mack checking in. Jojo, what's up, baby? I'm excited about this guest because he knows a lot about life insurance. We got some goodies for you too, Forex, right? And so, with no further ado, I'd like to introduce our guest. His name is Derrick Anderson. Obviously, he's from Gary, Indiana. So we always take pride in professionals from our area, and so we'll just get right into it. So tell us a little bit about yourself, and then we got some topics we'll just go through. But tell us a little bit about yourself, Derrick, and your experience in your field.
All right, perfect, man. I appreciate it, and thanks for the introduction. I also want to say thanks for the invite. I truly like the fact of being on, be able to share some information and just like I say, educate the people. So a little bit about me, my background. Like I say, born and raised Gary, Indiana. 44 years old. And basically, I've started in I'm Purdue graduate, and I with the background of industrial technology. When I got into that field, I really wasn't kind of sure what I wanted to do at that time. Like I said, graduated in 2001, and from there, I just kind of began to pursue things from a standpoint of the financials. And so it really wasn't until it really didn't click to maybe about 2005, 2006, and where I started to just kind of develop myself like mentally. So one of the things I'm big on is personal development and actually, as I said, growing mentally. So I started off into network marketing. Later from network marketing, I started into real estate. So I actually became a real estate broker 2007, worked for a company in Hammond, Indiana called Mobile Realty. We had an office in Indianapolis Boulevard. Worked there up until maybe about 2010 and moved to Indianapolis then. Worked for Century 21 Sheets here in Carmel and was there for about a couple of years, then left there, worked for FHA for 3 or 4 years. When I left FHA, I was kind of just getting started into learning how to trade stocks, wanted to get into like things like investing and just kind of wanted to know how the money worked, where the money was at, and things like that. And so long story short, I actually transitioned from that part into insuring. And so I worked for Mutual of Omaha and just kind of learned the insurance game from that standpoint. But ultimately, I really wanted to learn more about finances. So one of my mentors basically suggested that I get off into maybe the quickest route to kind of get into the finance, and is through banking. And so at that point, I became a banker, worked for Regions Bank for about 3 or 4 years, and then transitioned to become an assistant manager at BMO Harris Bank here in Brownsburg, Indiana. And then back in December 2021, it was kind of ironic how the story happened, but I ended up getting fired from BMO Harris because I had a business that was pretty much kind of a conflict of interest to them. And so, but like I said, I basically was, doing business credit and fund and showing small business how to go after business credit and funding. And the crazy thing about it was it's really alternative funding. So it's when the banks turn people away, they couldn't get funding because a lot of times when the business it's not at least 2 years old, the banks are not going to, give any funding or do any lending. So we do have alternative financing when it comes to that. So just kind of help those people out that I know that the banks were turning away. I wasn't helping anyway. But long story short, they let me go. And so I just decided to just kind of put my entrepreneur hat back on and get back out and do some things. And basically, I knew insuring was basically the backbone of what everyone should be figuring out when it comes to a financial education, a financial background, a financial stability. And I'll kind of get off into that, but I just wanted to just kind of give a little background about me. Like I said, so I've been in some different areas when it comes to the financial world and, like I said, dealing with people ethically, morally, things like that. And so a lot of sales and service. So like I said, I just try to basically, my ultimate goal is to help the average person, develop and grow themselves financially, achieve their goals, achieve financial independence, and also security. So a lot of people don't have the financial security that they are looking for. And so, I'm going to touch on that a little bit later on, but just that's a little bit of background about me. Like I said, 44 years old right now, single, still a bachelor. Like I said, no kids, but more so, like I said, I'm a family man still with my nephews and things like that. So, like I said, I'm training them up to, kind of be financially independent. Hopefully, before they even go off to college, they have a good idea of, what it takes to make money, how to make money consistently, and, just doing their thing. So I'm happy to be here, though.
Well, thank you. I do have a question for you, Rick. And I'm sorry, guys, I call him Rick instead of Derrick. So I'll be using it transferably. My question is, oftentimes people get so accustomed to working for an employer, and so when they lose, if when you lost your job, was there any fear of going back out into the world as an entrepreneur? Because again, people get comfortable. I have a job, I have insurance, I have 401k, I have every 2 weeks I'm going to get paid, or I'm going to get paid, bi-weekly or monthly. What was it like for you, and did you have any fear actually going back out and trying to, build a business?
Right. Yeah, definitely. I mean, like one of the things I will say in relationship to that is like there's always that fear of the unknown. So I definitely wouldn't sit here and tell anybody, no, I didn't have any fear. I was just, but what I had more than fear was faith. So, if you have that equation, if you put faith over fear, your faith has to be just like a division, the faith got to be bigger than the fear. So I was able to, say pretty much overcome that with just having faith. And when I tell you, like, really, let's say what they say, you can't see the whole staircase, you just see one step at a time. So it's really kind of like that. But as I would say to anybody, have some mentors in place and have some people who's been there, done that, and achieve greater than you. Because I feel like if you were just dealing with a bunch of people and y'all on the same playing field, I mean, there's who's going to help who become greater, iron sharpens iron and things like that. So basically having a couple mentors in place, and they were just saying, you have to grow and you have to get comfortable being uncomfortable, And one of the things that really was kind of like stuck to me is like they say, as an entrepreneur, you jump out the plane and you build a parachute on the way down. So,
Okay.
And
One
that's
more
like
question.
Steve Harvey said too. You got to be able to jump. Just got to jump.
Take a leap of faith. One more question. I remember growing up, my parents always told us, if you're the smartest one, and I think I'm pretty intelligent, but they always told us if you're the smartest one in your group of friends or in the room or the setting that you're in, something's wrong. Right. And so
find another room. Yeah.
Exactly. What would you say to that?
Find another room.
Okay.
Yeah, I mean, because you know what I mean? Like I say, there has to be, I would say there has to be humbleness in there. A lot of people, just like people don't understand this to me, and this is my concept. I'm always a student. So I'm always learning. You know what I mean? You're never too old to learn. You're never too grown to learn. You know what I'm saying? Should never be too high on yourself to learn, because we all can be experts in one field and novices in the other. You know what I'm saying? So just because you know everything in this field doesn't mean you know everything about this field. Just because you're a lawyer doesn't mean you know how to be a doctor. So that's just how I look at it. So, and anytime somebody, kind of brings that up, I say, humbleness is key. You have to be humble enough to be able to take in some knowledge that you didn't know. And, being unknowledgeable makes us fear things in some places. But also, like I said, also, if we're not taking in knowledge, we won't grow. We won't grow without the knowledge and taking chances and, calculated risk. I would say, take a calculated risk. Make sure if it is a risk, you know how much of a risk it is, and just be willing to, deal with that. But that's the only way we're going to grow.
Okay. Well, thank you. I know we have some questions for you. The audience probably will have some questions for you, so we'll let you dive into that. Thank you so much.
So we got the first, well, I wouldn't even say question, just first topic. So because this is your field, right? You are the professional. I always say that you are paid for your expertise, right? So you are a professional. So as the professional, I would always ask, first question, what is the importance of life insurance? Can you talk about that?
Right. Yeah, definitely, man. We definitely, especially when it comes to our culture, I would say, us as Blacks, the importance of life insurance is like, it's almost like, to me, in a sense of having a fail safe. So one of the things we do know that we are going to pass away. And, the key thing is we don't know when. And, one of the things that I think about, I always tell people this, like, one of the things about it, and we're talking about what's going on with the insurance, I mean, like the banking industry and this and this and that, there hasn't been any major life insurance companies ever go under. Have you ever heard of a life insurance company going under? Hardly ever, never, because, you know what I mean? And it's also, it's such a solid foundation that is actually, life insurance is guaranteed. That's one of the main things that's not, that you pay your premium when you die. It's guaranteed to pay out. There's nothing else is transferred. So when it comes to that, that's just like, I tell people is like, okay, if nothing else in life, if everything when it comes to like families and things like that, tragedies, we don't know when that's going to happen. But what we do know is that a lot of times, if that life insurance or if that financial backing isn't there, when someone passes away, I mean, it literally tears the family apart. From sometimes the father may be the breadwinner and the mother may not be. She may be the home, taking care of the home. And so if she's no longer able to just do that, now she has to go out and work and do things that she's never done. Or I've even seen it where sometimes businesses, a husband ran a business and then the wife, didn't know how to even keep the business going. So the business failed along with the husband. And now, no income coming in and, things have changed. So what it is, and also the biggest thing about it is it also creates a burden for the family that's left behind. You know what I'm saying? And that's why in a sense of us as a people is why a lot of times we're, putting ourselves further in debt. Because if you think about it, if we had to get 5, 6, sometimes even if it was a funeral of years, in a family, think about how much impact that has on the family having to pull together money because this person didn't have insurance. Now we're pulling from money that we didn't have in the first place. You get what I'm saying? And putting themselves in debt. So it kind of also creates debt to where in the average white family and things like that, when someone passes, they're gaining. You know what I'm saying? There's plans in place. They have things to, put in and ways and structure to, keep the family going. So they know that if anything else fails, and I just look at it like this, if we know that we have one payment that we should make, and I would tell anybody it should be the life insurance policy payment, because if all else fails, you know what I mean, that's going to be able to help sustain the family, and try to get themselves back in place. So the importance of life insurance is basically the fail safe and being the instant liquidity for a family, tax-free funds that also come into the family to be able to keep a family going. And like I said, and when it comes to us and having dreams and goals and visions for our family, a lot of times we'll think about going and working and saving and leaving something, when all we really have to do is pay the life insurance policy, and then there's guaranteed funds for that person, and then we can enjoy more of our money, like as far as like a parent or something. So as a parent, you want to have your child go to college and do all these things. So you're putting money away each paycheck and doing this, but you're not really getting the chance to really live your life because you're trying to put away the money that you earn to save for your children instead of this, having a policy and letting the death benefit be the child savings in a sense.
Okay, question for you, Rick. If you had a family that you were talking to about life insurance, I know oftentimes it's hard to talk to people about death. How would you convince or persuade that person to see, because people purchase things where they see value. People buy, Michael Jordans because they see the value in Jordan as a player. People buy car insurance because they see the value in having their car insured. How would you talk to them about the importance of actually having life insurance for their family and the need to have it outside of their own job?
And before you answer that question, I think that goes into the next topic, which is the importance of financial literacy. But go ahead.
Okay. Right. So basically, tell me that one more time. Can just reiterate that again.
So, oftentimes people struggle with talking about death because they don't want to imagine losing a loved one. So I know, just as you said, just as we have a born day, we also have an expiration date. But people in our culture, they steer away from that because they'll say, well, I don't want to benefit off losing a family member. And so that's the mindset that they have. So they're scared to actually get life insurance for their family. What could you do in order to help them see the value in purchasing insurance?
Well, I mean, ultimately, like I would say with me, it would be my real life experiences, just sharing stories with them, because just as of yesterday, and I mean, Candace, you can attest to this.
Yes.
I have two buddies who were buried on yesterday.
Hmm.
You know, two friends, and we're talking in their 40s. So, you know, we're not talking 80-year-old deaths and 90-year-old deaths. We're talking 41-year-olds and 48-year-olds. Why I say the most important, the importance of life insurance and getting it right now is the three things that actually life insurance, you know, the three biggest factors about life insurance, and that's age, health, and affordability. You get what I'm saying? So a lot of times people feel like they have, you know, forever to get insurance because they're healthy now. And all it takes is the diagnosis, and then you're no longer insurable. You get what I'm saying? So you may have been fine, you know, and then you go and get your checkup, and now you have something. Now you're not insurable. Now you can't go it. And that's usually what I see. Whenever I see someone that's like, hey, I need to get some insurance, it's usually somebody that can't get insured. You understand what I'm saying? They realize now they can't get insured. Now it's a panic. So we can't do that. You know, we have to realize that the importance of doing it is actually having it early on in life, because that's when it'll be the cheapest. You know, I don't care how healthy you are, but as you age, your insurance is going to get higher. Going back to your question, Candace, and that's the biggest importance of having your own personal private policy versus having a work group policy, because, you know, at the work group policy, once you leave that job, you're no longer, you're no longer going to have that coverage, and then you're going to have to go out and get coverage for whatever age you are. But if you also notice, with the group policies, it's a whole lot cheaper. It'll be a whole lot cheaper because it's the group, you know,
they rate you as a group.
Right. Yeah. And so the difference with that being, well, don't want to get into much of the terminology, but it's what's called your mortality. I'm sorry.
Mortality.
In which they kind of figure out about what age you would die based on, you know, whether they give you insurance at what age and things like that. And so it's just based on a bigger pool of people now, you know, and that's why they just kind of do it off a big pool of people. Now, when you do a personal policy, they're going to look at your actual age. And a lot of times when they're giving you, because a lot of your companies will just give you, let's say 1 or 2 times your salary, just giving you that type of insurance. And it's usually term insurance. And so that's why they do it each year. But as you can see, it goes up because it's based on your age. So it may go up, you know, $2 a paycheck or something like that. You may not think it's up, but if you got a pool of people, that's a lot of money that's coming back into the company once they're paying it. So, you know, just to say the importance of having the insurance is because you'll never know when you need it. You understand what I'm saying? We don't want to, and this is what people do. I mean, you can't wait till you're on your deathbed to get life insurance. You can't wait till you find out you have cancer. You can't wait till after you've had a heart attack. You understand what I'm saying? That's a lot of times when people want to, you know, that's when they reality hits, and they're like, whoa, maybe, you know, I can pass away and I don't want to leave my phone. So the best thing is to do it. And this is the kind of the real, to me, the real meaning behind it when people talk about health as well, because the healthier you are, the better life insurance policy you can get, which is going to increase the better return on the money that you're getting when you put it in the life insurance policy. When we're talking whole life and things like that, and the bigger the death benefits. Or, you know, a healthy person, you know, at young age 21, you know, if they're putting in $200-300 a month, I mean, they're getting a huge benefit of the policy, and most of that is going to the cash value side and not just the premium for the insurance. And so I would say it's always good to get a personal policy in place, regardless if you have like one through your job, because also getting a whole life policy, and the difference between term and whole life is term is for a term. So you may have 20-year term, 10-year term, 15. So it's just like anything else. Once that term is up, that insurance is over, there's no cash value in it. So when we're talking term versus whole life builds a cash value. And also the benefit of whole life is you are still paying the same premium for whatever age you attained it at. So say, for instance, if I get insurance at age 25 and it was, you know, and I just made it, let's say it's just a round number, $100 a month. When I'm 65, my premium is still only $100 a month. When I'm 85, it's only $100 a month. That's the difference in whole life, because you have that premium for your whole life. You know, you have that same premium. Your premium doesn't change; it's fixed. So the difference in term is, if I get a term policy at age 20, if I get a 20-year term policy at age 20, I have the term policy, but when I turn 40, now I have to get a term policy. And then think about it, there's no cash value being built. You know, there's a rider, which is called a return of premium rider, where you can get back the money that you put into the policy if you actually accept it. But it makes the policy a little bit more expensive because of the rider that you put on.
Mhm.
But it's a way to get some cash back off of a term. So you can get something back off a term. But when it comes to the whole life, like I said, that is how you build cash value in a policy. And from there, you can have money to come back into the household.
I got a question. So it just popped in my head real quick. So, um, how do you feel about AARP and their policies, right? They're like, because I stay in Milwaukee. What's really big here is Northwestern Mutual. That's like the grand ta here, right? So
Uh-huh.
they're headquartered here, and so what would you how would you rate AARP versus Northwestern Mutual versus some of the like state, like I don't know if State Farm has life insurance, but just the companies, period. In your experience with dealing with them or talking about it, what would you how would you rate them?
Um, it just depends. Like, and I tell a lot of people this, when it comes to like life insurance, it's almost like choosing a bank. You get what I'm saying? They're all kind of regulated in a sense to do the same things. And like a lot of times when people looking at the rates or the deals or what they can get, and who's the cheapest and things like that. One of the things you want to look at is like service of a company, stability of a company, how long they've been around. You know what I mean? What are will they pay out? Are they, what is their payout ratio and range? So a lot of times those things factor in when it comes to choosing a company and the company that that you feel is the right fit for you. Like sometimes, like how long it takes once the person passes. How long do I got to take to get my money? That may play a bigger factor in, what I mean? Oh, it was a little cheaper, but it took me 3 weeks to get the money once, this person passed. So, so those are some of the factors you want to look at when it comes to just, like I say, picking policies. And then also um, whether or not the type of service or the level of service you want, whether you're looking for someone that's independent or you want to call in an 800 number and just talk to anybody. You get what I'm saying? So sometimes it's a lot easier for an insurance company to do it on volume because, it's not really personal or things like that. And I'm glad you touched on that because one of the biggest things I want to say about with the company that I represent, which is Midwest Legacy Group, with Midwest Legacy Group, one of the things that we do, so we not only deal with insuring, we do the financial planning perspective as a whole. Because of the biggest, one of the biggest things that as I got back into insurance and speaking on that, it was more so the topic of um, affordability when it came to insurance. So a lot of times people may need this amount of coverage, but they can only afford this amount of coverage. So there is a gap in what's needed and what's affordable. So a lot of times if we go back in and we will just kind of look at a person's overall situation when it comes to their finances to determine what's more so feasible for them. So in that aspect, we kind of break down where people are when it comes to if they're a saver or a spender. You know what I mean? At what age do they plan to retire? How much do they plan to have monthly in retirement? So this is how we're big on education and we're big on differentiating ourselves from that aspect. And I actually have my VP of the company. His name is Eric Nagel. We usually do joint appointments, and that's what it is. It's like when you're talking about financial planning, you want to look at it from an offensive perspective and a defensive perspective. Offensive is investments, retirement plan, 401ks, so you defense is more so like insurance and savings and things like that. And so we just show our clients how to get in different buckets, putting money in different buckets. So a lot of times, okay, if let's just say, for instance, if someone says, okay, well, we can save this much per month. So usually what we do is we don't go off of a dollar amount. We usually just gotta go off a percentage amount of your income. What makes sense percentage wise. 10%, 15%, 20%. Your savings goal is going to determine your retirement, how fast you can retire. That's one of the biggest questions that we ask our clients. Okay, at what age do you plan to retire? Okay, well, I want to retire at, let's say, 60. Okay, well, if you're 40 now, you know what I mean? We have 20 years. And if you don't have a 401k in place, then we kind of need to increase that savings percentage. So you may need to be at 20%, of your income to just kind of catch up and be able to retire at the age of 60. So, like we talked about, numbers don't lie. So we have to make it make sense when we're trying to help people retire on time. And that's why I say when it comes to education, I'm big on helping people with, personal credit, saving, checking and balancing, you know what I mean? And also when it comes to your budgeting, you know what I mean? A lot of people, we don't budget, and people don't think about it. Like, you can have $1 million budget, you just still need to budget, Big budgeting means broke. Like, I'm on a budget. Like, no, I'm just careful with my finances. I know what I want to spend. I don't want to spend $300 tonight. I may want to spend $100, So, I just, like I said, I'm big on helping people when it comes to being in a better position down the road. You know what I mean? Sometimes we may be in a position right now, we're not sure where it's going to transition to, but we have to start somewhere. So when it comes to, just like you're talking about, Candace, like I said, those are some of the stories I would share with people when I talk to. Just like I have a client right now, 65, has some things, had to transition maybe a year ago from the position she was at, through that hardship, had to go off into her 401k, you know what I mean? Just trying to get back on her feet. Now, also with the market taking a turn, took another, chunk of her actual, retirement money. Now she's, still knowing that she has to work probably another 5-10 years easy just to catch up. You get what I'm saying? So
she'll be at 75.
Easy, And she's also saying she may have to just go back to school to, get a different degree because she took a pay cut. So these are the things that we want to try to help our people just kind of, stay out of the trap. Because one of the biggest questions that, like, my mentor asks me or tells me, like, this is basically a conversation starter with people is, basically, do you think there will be another stock market crash?
Oh, absolutely.
Yeah. Right. And so then, the next question behind that is, so how do you protect yourself from, taking a huge loss? That gets people to think, like, how are you protected? And a lot of times this is what we show people is how to have the downside risk. So when the market goes down, you have other buckets of money that you can pull from and let the market rebound. Instead of, if you know what I'm saying. So if your stock went down why would you want to pull from it now? And it's going to be worse than trying to let it rebound. So that's just what, some of the things we teach. And like I say, when it comes to financial planning, most of it is education, discipline, and just kind of working through your plan. And so that's what we do as advisors, make sure your plan is in place, the plan that you set, and we just kind of help you fulfill it versus pushing product, And so that's why, like I said, we work differently. The actual owner of the company I work with is the company I work for is Midwest Legacy Group. The owner of the company is actually Christopher Gandy. Now, Chris Gandy was a former Bulls player. He actually played for the Bulls in '97 with Jordan and everything. Had a quick injury. Yeah. had an injury early on in life. And I mean, early on in his career, so he had to, switch up. So he actually got off into insuring back in early as 1999. So got off into insuring in 1999, opened up Midwest Legacy Group in 2012. Okay. And so it's been around, for a decent amount of time. But actually a friend of mine just kind of connected us, figured I'd be a good fit for the company, and it's actually worked out. Chris is a outstanding, agent. I mean, he really is. Like, we basically are kind of contracted with One America. So we do like have a base of One America products, and he's been in like one of the top agents for the past few years, $1 million round table and things like that, in which it's a big deal for agents. And so, like I said, I like to just kind of help people go from A to Z when they're looking at their finances, and just seeing the importance of it down the line. I actually kind of make it my job to talk to younger people as well, because this is where we should have started. 21, 22 saving, not 20. You know what I mean? Not 52 and 42 just starting out saving and putting money in 401k, because it's going to be a real uphill battle, and that's the biggest part about it. Is like we, starting back a long time ago and building, but sometimes we have to deal with where we're at. So if we didn't get a chance to do that, we can't go back in time, but we just kind of go from where we're at. Just like even we're gonna see how to help my client that's still 65 right now. You know what I mean? We're gonna help her just trying to transition, take her money that she has from her 401k, try to help her build on that and just kind of go from there. But like I would tell anybody, because if we don't start somewhere, that's what's going to continue the generational, lack when it comes to us in finances. Like if we're not setting our children up, and like I said, a lot of times, and this is the biggest thing, we talked about leverage. That's one of the biggest things about insurance, because just say this, that's why it's kind of considered almost a unilateral contract, because the insurance is kind of putting itself at risk early on, right? So if you have $1 million policy, you could be 1 month, 2 months into the policy, get killed, and they got to pay it out, and you only made two insurance payments. You get what I'm saying? So a lot of times, we think about the leverage of that and how we instantly, like, okay, so you get into this insurance policy, you qualify, you instantly have this amount of money, 250,000, 500,000, whatever your death benefit is, you instantly have that now for your children, for them to set them up, versus you trying to work for that. That's the biggest thing I want to put it there as well.
I got a quick question too. So I'm glad you talked about that, because this is a topic that happens, and Candace is very passionate about. And so when stuff happens, right? Tragedy happens in all areas, right? I remember when my mom got killed, panic mode, didn't have insurance. I was 23. So like my brain was far from life insurance, none of that stuff, right? And so GoFundMe accounts wasn't around back when I went down like 2004, I believe. And so can you talk more about these situations here? Like when people have, GoFundMe accounts and,
wow. Yeah.
I obviously didn't want to expose who the person was, but, you have these situations. And so, can you talk more about not having to go down that route of fundraise and stuff like that to pay for funeral costs and, burials and stuff like that?
Right.
And before you dive into that, I just want to say, how many more fish fries we gonna have to bury our family members before we really kind of key into the importance of having the insurance policies?
Exactly. And it's a sad situation, because just like I was speaking on before, that's what creates the burden. That's in a sense, we have to be more mindful of the people we're leaving behind than just, it's kind of almost selfish to not take care of yourself.
Say that again.
Yeah. It's pretty selfish to not have yourself taken care of. And I mean, I'm saying something as simple as burial insurance. You don't have to have $1 million policy, but if you're not able to even just kind of be buried, it's a shame that we don't, and it's almost about valuing yourself. Do you value yourself? Do you want to be put away? How do you want to be put away? Sometimes we go deep with our clients and asking them, okay, do you know where you want your funeral to be? Do you ever thought about getting a plot? You know what I mean? Things like that. And, all the way down to what color you want to have on. You know what I mean? It makes people really think of like, man, this can really happen one day. So a lot of people are prepared to the T. They know what they're going to be in. They know what they're going to, they got it all the way planned out. So that goes again, what we specialize in mainly investments, insuring, and helping our clients minimizing taxes.
Okay.
So myself personally, I work with more so entrepreneurs and business owners and investors.
Okay. I do have a question for you. So when I had in my Rick, I think I sold you a policy when I had my own insurance agency. It was for your
Mhm.
dogs, right?
Yeah,
Yeah.
for if it was like renter's insurance.
Yeah, so Rick had these dogs, and he had to have a policy, and I sold him. I think it was liability coverage for his pets. However, one thing that I ran into is it was a husband and a wife, and it was like they had like 6 kids, and the lady, she owned her own business, and he had like real estate. And so I was like, hey, the wife was all in, she was vested, but the husband was not vested. He basically was like, if something happens to me, I'm gonna leave my kids a house, blah, 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 blah. I was just like, okay, well, if you're the sole provider and something does happen to you, you don't make it home at night, what does it look like for your family? Well, I'm just gonna leave them some houses and things like that. I'm like, yeah, but oftentimes when you have those houses, if they're not already fixed up, or if they have a mortgage on them, or some money has to be paid back to the bank, what does that look like for the family? And if the kids are teenagers, or if they're little ones, they're not going to know how to adjust and get into that. How do we keep, the family secured and protected in this sense? And I was kind of baffled because, again, like I said, the wife was vested, he was invested. How can you persuade someone who has a lot of real estate and own these homes to still value insurance? Because what they don't know is that if you have insurance and something happens to you, insurance actually pays off those mortgages and those houses that you had. So how could you? I wasn't able to persuade him. He was king and he was set on it. But if we were in this day and time, because that was 20 years ago, but in this day and time, because obviously I was in my 20s, I think I was in my early 20s, they were in their 30s. How would you talk to a client today about that same scenario?
And before you go, I'd like to add, if you have any questions, please put them in the chat. Please go ahead.
Yep. So mainly, with that being said, I would normally approach it in just kind of like you said, on the sense of a lot of times these houses and things that people will leave for their heirs usually get sold in probate for very cheap. You know what I mean? End up just kind of going into foreclosure. A lot of times, maybe there's maybe more than one on title. And I'm actually going through that with a client right now. There's more than one people that they put on title of the house, right? So let's say if you have 4 grandchildren, you put all 4 grandchildren on the title of the house. Now 3 could be wanting to sell to get the money of it. One doesn't want to sell. It's not going to happen. So, you know what I mean? Also with those properties and things like that, when they pass the property on, you know what I mean? You want to make sure that if you're passing the property on with no liquidity and things like that, now they're paying the taxes, the rent and the repairs and everything. And some people just don't want to deal with it. You know what I mean? So why would you set yourself up for that? So I tell them if it's and I dealt with that when I was in real estate. I had people who, work their whole life, build a house, leave it to the kids. The kids were on drugs. You know what I mean? Kid didn't want to do, the house just deteriorated and went to tax sale. So it's just basically more so like preparation. And again, how I would talk to them about that is actually going back to that full financial plan. You know what I mean? What does that look like for you? Because a lot of times when people just buy insurance, they don't really look at the whole scope of what they really want the insurance money to do. You know what I mean? It could be a very, very powerful plan that you can set up by having that money. And then like we're able to partner. We have companies that we partner with and lawyers that we partner with for helping our clients set up wills and trusts, things like that. So when that happens, you get what I'm saying? Now you're looking at the full estate planning, financial planning. Hey, and then you can basically, when we talk about living trust and things like that, where it's like when the person passes on, it's almost like they're still living because they're getting their wishes fulfilled just by what they've wrote out and planned. Hey, such and such gets this at this age, and she doesn't get this to this age, and I want this to go. So it's really, and that's how you really want to do it. Versus a lot of times, even that ruins a family. That money was left, and there was no really plan behind it to help them, and they just blow it. You know what I mean? Even in insurance world. So like I said, mainly when I sit with clients, I really want to know more than, what do they want the insurance to do for them? not just to have it. What do you want it to do for you? Is this for them to live on? Is this for them to, build and grow? How do you want that to work for you? So I like to, kind of dig a little deeper to make sure that they have a plan for, like you said, if they have a house. How is this house going to help them if they have to do, pay for this? Are you going to leave some money for them to even pay for it for the next, and like you said, and if it's not paid off, that's one of the biggest things, is this house free and clear? But like I said, and sometimes it's all about the mentality. They may not even, have the investor mindset that you had. They don't want to be a landlord. They would rather have that money. They would have rather had that money in their hand.
Seriously.
And
that coin. Yeah.
Okay, so when we all kind of huddled earlier today, Amaru brought up power of attorney. So can you talk to us about just a little information, power of attorney, what a trust looks like and what a will looks like? Because I know a lot of, like us, we may know what that is, but for a lot of viewers, they may have heard the term, but they actually don't know what it entails, and they don't know information about it. So it doesn't have to be a lot, but just, talk to us about what power of attorney means, beneficiary, contingency beneficiary, will, and a trust, if you don't mind.
Right. Okay. So basically, when you with the will, wills are set in place. Will is like your last testamentary statement. Wills give you your last authority. Wills keep things from going to what's called probate, which is the courts being tied up in the court system for the court to have to say who's legally entitled to this fund. So just basically,
Stop right there. Say that again. So if you don't have your stuff in place, what happens? Say it again.
It'll be tied up in court. It could be months, it could be years. One of the simplest things about that is, like I said, from my banking background, right? People don't even know that. I mean, even if, say, if you don't have a will, right, but you can at least on your accounts, your bank accounts, have a beneficiary. Mm-hmm. You get what I'm saying? And the beneficiary is who's entitled to the funds once it, if anything were to happen to you. A contingent beneficiary is if something that happens to the beneficiary, then you're next in line to receive the money. So with that, with that being said, it would be to that, like people would pass away, and if they, once, especially when their parents and stuff start getting up in age, they'll add their child as a co-owner, so there's some that they have immediate access to that money, or they don't want them to have access to it now, and they'll make them a beneficiary once they pass away. You get what I'm saying? So I don't want them to be able to touch it while I'm alive, but I want them to have access to it. So when we talk about the probate part of it, probate could be a part that where you have to go through all the issues just in case, like we were talking about. So for funeral expenses, those, the funeral home wants those kind of paid up front and things like that. They don't want to have to depend on you going through probate and doing this and that and say, hey, we got the funds, we just can't get to it right now. So they want to make sure that they're get insured. And that's also one of the benefits of the life insurance policy. They're going to pay it directly to the insurance, what the portion that you want. Hey, just send this to, this funeral home company, and then send us the balance, and that's how they can basically make sure that the funeral is paid for. So I've seen instances where people don't have life insurance, but they have enough money. They have a lot of money, but they still couldn't get to the money in time for the funeral. So it still looks like a struggle. They still look like they were broke trying to pay for someone's funeral. You understand what I'm saying? Even though this person had a lot of money. Because
you talked about working in banking. I worked at the bank. I remember a guy actually coming to the bank, and he went, and I said this before, he was going to Italy for the Formula One race. He wanted to get like 200 grand out the bank. Guess what the bank told him?
No way.
We don't have it. We got to order it. And he like, what? Yeah. So you have to, it's a certain waiting period that you have to wait to get your own money.
Right.
And just real quick, so I have a quick story. So when my brother was murdered, he was tragically murdered in 2004.
Sorry to hear that too.
Thank you. We didn't have insurance, right? And so this is why this is very dear to me, because and no one can predict life expectancy. No one can predict any of that stuff. But when stuff like this happens, this is why it's important to have it in place. And so my mom didn't have insurance. I didn't know, just no one in our family. So what ended up happening was I just moved to Indianapolis. I just got my apartment. So I'm riding high. I got my taxes and everything. Well, when this happened, had to not only deplete my own account, which put me in the negative to overdraft, also had to relinquish my lease, right?
Wow.
And so it put me behind the eight ball for a couple years. And so like I don't fault my mom and all that, but I fault myself because if I was further along and was further along in my thinking, I could have had something in place. So when something like this happened, it wasn't restricted me from my life. And so from
Exactly.
life choices and stuff. And so this is why it's important because, and the reason we say it's selfish, because like let's say if you do have a career and you're making all this money, right? But when it's time, when your time comes, because like everyone says, three things are guaranteed: you're gonna be black, pay taxes, and you're gonna die, right?
Right.
So when you do pass
And
on, and you have
in that order.
yes, when you have kids and that happens, it's selfish because now the kids have to stop what they're doing, hold their, halt their life.
In their life savings.
Now, or let's say if you stay out of town, right? Stop where they're at, come where you pass and handle your businesses, handle your ordeal, stuff that you had going on. And so that's a lot of stress because our lives are already stressed as it is. We're 40-year-old adults, families,
Yeah.
careers. We got a lot of stuff going
Mhm.
on. Not saying that your parents can't pass. Yes, they have that decency. But as parents now, if you don't have these things in order, you're going to create more stress. You're going to create, more issues and stuff. And so
Also,
that's why this is dear to my heart. But go ahead.
yeah. Also, what I wanted to touch on, I'm glad you said that. Um, I also wanted to talk about how, if you look at it, from a perspective of, let's say you have a parent right now. We also talk about one of the things you want to talk about is long-term care and long-term care expenses, what that look like. So that's part of insurance as well. But a lot of people don't touch on that. And why I touch on that right now is because a lot of people don't know this. So say, for instance, somebody has, they think they have, a decent amount of money. So you get, let's say 100,000, for instance, right? When a parent, has to be put in a nursing home and things like that because they can't do the activities daily living. So they have to put in a nursing home, right? I used to work not in a nursing home, but I used to work in the bank that was inside of a nursing home. So I would actually get to see this from a different perspective, right? So these people are coming in and making their payments. They have skilled nursing, you know what I mean? Skilled nursing where they got to actually come in and do stuff for them. Man, I mean, their payments for could be, 5,000-7,000 a month. You know what I mean? So how long is 100,000 gonna go if you're paying 5,000, 7,000 a month? You get what I'm saying? So a lot of times right now, what's being big and what's not being talked about is just kind of if parents are able to get it and can qualify for it, is to start the long-term care if they have the funds, and then we have an actual policy to where they can actually pay into the long-term care plan for a certain period, right? And then also, when that person passes away, they'll get what they paid into it back as like a death benefit. So this is phenomenal, like I said, for them to leverage it. Otherwise, what's been happening and what goes on in society that a lot of people don't notice to talk about, right? So let's say if you have a little bit of money but not enough, this is where it comes to where, like we talked about, this is where you want to get with your people to kind of structure it when they talk about a trust and things like that, where you're starting putting money into the trust and not in your name, but you have to do it like maybe 5 years before you started going to a nursing home, because they're going to look at your assets going back 5 years to determine if you had the money, what you did with it, and this and that. So if you did have some money before you have to go, before they let you go into Medicaid, then you have to do what's called a spend down. So a lot of people try to hide assets, try to just spend this money to pay it off. You know what I'm talking about as an accountant, try to disperse it and you try to look broke, but it's like the money that you worked hard for all your life, it still wasn't enough. So that's why I say a lot of times we have to figure out how to leverage our money, and that's why I say the biggest thing about life insurance is leveraging. So if I could pay you, let's say $200 a month, so $200 a month, let me do a little math, let's say $250, average policy $250 a month. 250 times 12 times, let's say 20. So that's 60,000. So when I talk about insurance and leverage, right? So you paid 250 for the next 20 years, you paid in 60,000. But if you died at year 19, you know what I'm saying? And you got, let's say you had a $350,000 policy. That's the biggest difference in the leverage. Instead of you trying to save $250 a month, you know, you can leverage it with the policy. And that way you'll have that for your children when you get what I'm saying? So that's why I think about when I say this, as far as like leveraging with the insurance, because it's hard for us to save the amount of money we would want to have our children to have just by working a job. You get what I'm saying? Most jobs don't equate to rich. Most jobs may equate to a standard of living that you want to have, but it doesn't equate to rich. So unless, you know what I'm saying, like I said, we talk about investing in investments, then you want to decide, you know, what type of investor are you? You want to be active? Do you want to be passive? Or do you want to be aggressive? Or do you want to be, you know, kind of reserved? So, you know, it's just different ways you want to look at it. So that's why when I talk about when I learn more about financial planning and just not just trying to sell insurance, I mean, it came with a different perspective, a different sense of, you know, accomplishing, you know, helping someone be accomplished, then just give them a policy and they just like, you know, because when you just give somebody a policy, it's almost like you know, they don't want to have to, like you talked about, they don't want to have to think about death and them dying. Oh, I got this policy, it's just for them. It's for, you know, no, let's set you up. And then, like I said, we also talk about how you can actually set a cash value policy up to give you a living benefit, the cash value whole life policy, to give you a living benefit and not just a death benefit. So you'll actually be able to utilize the funds that you put into the policy while you're still living. And you know what I mean? Take those funds, invest them, you know, and actually do some different things with the policy. So that kind of goes into the concept of what there's a thing called infinite banking right now. So with the infinite banking, you know, that's also technically what it is basically overfunding a life insurance policy, whether it's a traditional policy or a index universal policy, and just basically overfunding it. So you have the premium, then you have the amount that you put in over the premium, and that amount that you put in over the premium goes directly to the cash value, which can be borrowed against. You get what I'm saying? And so when you borrow against a cash value whole life policy, the biggest difference is you don't borrow from the cash value, you borrow from the death benefit. So let me give you an example. If you put $50,000 into a policy and you have a death benefit of $500,000, if you wanted to borrow and pull that cash back out, your $50,000 is still sitting in the policy, but your death benefit went from $500 to $450. So you actually pulled from the death benefit and your cash value is still getting interest on that cash value. So this is what the wealthy do and how they structure it into how they're just, you know, a lot of people don't realize like Disney was funded on cash value life insurance policy.
Wow.
So, quick question, Rick, you actually got a question from a viewer, and then I have a follow-up question for you. She says, what type of insurance pays off your home after your death?
Thanks
okay.
for the question, Asia.
Yeah, absolutely. So basically, most people call it mortgage insurance protection. And what that is usually like term insurance. So with term life insurance, it's cheap, but it's for a term, just like a mortgage, right? So what most people do in order to, you know, you could do like a hybrid policy to where you have a actual whole life policy with a term rider. So we do that. We structure it like that. A whole life policy with a term rider, and with the term rider, we use that for the term. So whatever your home is. So if you got 20 more years left to pay off your home, then we'll do a 20-year term to where, so by the time this term expires, your home should be paid off. And if it happens not, you know, or if you happen to pass before it's paid off, then that will be the portion of your policy that you would pay off the home with. So a term policy is what we use to for what's called mortgage insurance protection.
Okay, thank you. A couple more things. I know we got to get off here shortly, but I want you to, because I really want people to know the information that you have to give and also how they can contact you. So I know we talked a little bit about knowing the difference between a Roth IRA, 401k, a 403b, and a pension. Can you kind of elaborate on that a little bit, please?
Yeah. So, yeah, I did want to touch on that. So a lot of times, and I just want to drop some nuggets too for people just to, basically paying attention. So one of the things we do is kind of help people structure where their money goes in what buckets. So you have retirement accounts. Those are all retirement accounts, right? So which means you aren't able to touch those funds until you're at least 59 and a half, or you're getting penalized on that. And also they're taking a certain amount of taxes. Now you're also going to get taxed on the money once you take out. So what we try to get people to see is do you want to get taxed on? Let me ask you, Candace, would you rather get taxed on the seed or the harvest?
To be honest, I work for the money already, and I don't feel like I should, have to be taxed on either one. But I think that I don't know what the future looks like or what inflation looks like, so I'd rather get taxed.
You think tax is going to go up or down?
Yeah, I want to get taxed already, so in the long run, when I pull it out, I don't have to get taxed on nothing because I don't know what it's going to look like 20 years or 50 years from now.
Right. And so, and that's the way we help structure it, right? So a lot of times we do a lot of 401k rollovers where people have 401ks that are just sitting out there and, it's still at this job and they don't know what's going on with it. It could be going up, it could be going down, you know what I mean? And it's been 5-10 years and they just like, it's sitting over there. So it's not making you any money. Nobody's watching it, you know what I mean? So you want to get invested. So what we help most of our clients do is kind of like make sure they're properly structured, right? So when you're paying into a 401k, it's good to pay up into the match, but anything over the match should be going to another bucket. You get what I'm saying? So it shouldn't be going to your retirement bucket because what about the right now bucket? You know what I'm saying? What about do you have at least 3 to 6 months of savings? Let's put that other 2% or 3% towards that bucket that way it's liquid and accessible now. So we help clients structure their short term, long term, and medium term goals. So a lot of times they're putting money that they can't access now, and then it's gonna still make them look like they got it, but they really can't touch it. So we just kind of, like I said, it's different ways and nuggets that we kind of help our clients plan for the future. And also taking that 401k, those old 401ks, like you said, go and get taxed on the seed, and then we show you how to grow it. So then the harvest, once it's grown, you don't get taxed on that.
Okay.
It's after tax dollars. A Roth account is after tax dollars. A traditional account works like a 401k. So a Roth is after tax. That means that's money that after you got your check, you put into that. And you can only put up to, I think it's maybe like $6,500 a year, $6,200. I think they increased it to maybe $6,500 a year. But it's money that you can actually move and invest and put and say, I wanted to go here, there, and there. A 403b is more for like teachers and things like that. And pensions are fading away. We don't really have pensions anymore. Pensions were like what our grandparents had, and they were so lovely. They paid them for the rest of their life till they died. And whether they, did anything or not, they're not doing it anymore. I would suggest anybody to look into 401ks and things like that and how to invest their money, see what they're invested in. You know what I mean? Make sure that the graph is going up and not down. That's the simplest thing I could tell them,
And then, okay, here it is. The elephant in the room. Now, I know that it is tax season. If you're in a different tax bracket, like some of us are, we actually have to pay taxes. We owe. However, if you are in a space where you don't owe and then you are getting some taxes back, Rick, how can I get in contact with you so that you can, it's okay if you go out, get caught up on the bills that you already had, buy your kids some stuff, pay some things off, great. But for the portion of the money that you have and you want to put to the side, Rick, how is a good way for them to actually get in contact with you and do some consulting so you can actually tell them where to put that tax money so that they can generate some extra income for sustainability, like long term?
Absolutely. Yeah. So the easiest way is, contacting me by phone. So my phone number is
I got you. Hold on. I got you. Right there. I got
All
you.
right,
Right
awesome.
All his
Yeah,
handles are right here, guys.
yeah, there we go. Absolutely. Yep. And
now,
so,
do you? Obviously, the question is because COVID space now, and we got Zoom and Teams, and so do you do virtual meetings and consultations also?
yeah, absolutely. The www.Anderson Investing Group is actually my link for my calendar.
Okay.
So they can book a call, book to schedule a call there. And then from there, we usually set up a Zoom meeting. So it's all done Zoom. So most of it is Zoom. I'm actually licensed in Indiana. I'm sorry, yeah, in Indiana as well as in Texas.
Okay.
All
So
right,
far.
Derrick, I want to get you kind of connected. We have she is actually one of our friends. She went to high school with us. Her name is Tawaria. Tawaria is licensed in all 50 states as a
Okay, dollar bill.
she works for, she's a tax preparer. But I definitely want to get you hooked up with her. And I laughed, me and Amaru laughed when you said we got to be correct because everybody hiding and tucking money. And she said, as a tax preparer, people were taught to hide and tuck money when they're entrepreneurs, but when you go to buy a house or a car or a new business, and you have the
It
money,
hurts
you
you.
can't show yes, you can't show where the money come from. It actually hurts you. So I think you and her building a partnership will be like a great thing. So we'll get you connected
Absolutely.
with her. She's actually on here somewhere. I've seen her say hi, but again,
Okay.
you guys know how to run the business, but be solid on paper so that when you do try to go get something and you're an entrepreneur, you don't have those same issues. Or when you have life insurance policy, actually building that cash value versus, having term insurance where you do have insurance, but there's no value added to that. One more question I have. The terminal illness rider. Some people don't even know that exists. And I think that is, we're talking about building generational wealth. So terminal illness rider. And if anybody knows, like, I've had some tragedy in my life. Amaru has tragedy in his life. Rick, you lost both of your parents at an early age. So you had a lot of tragedy. And I know some of your friends from high school have been passing away, as long as I can remember. Could you just tell them what the terminal illness rider is so that they know what that looks like?
Yeah. So terminal illness rider normally covers heart attack, cancer, stroke. So if you are with those riders, so if you are diagnosed with like one of those, and then if it's, let's say, like terminally ill to where they'll actually give you sometimes from anywhere from 50% of the cash value policy up to maybe like 80-90% to actually have and do what you want as your last wish instead of until you die. And then also maybe to pay for treatment and things like that. So
I've seen people get as much as $1 million where they can go and spend time with their family. And see, this is the information that our people don't have access to. Why? Because we perish from a lack of knowledge. So that's why when I talked about perseverance earlier, you have to persevere. You have to ask the right questions to get the right answers. And so
I want to add to that too. It's funny because I had this conversation with my stepfather, and so I've talked to him about a will, and he was like, "No, I don't want that." He was like, "Creep made me burn my black ass up and throw my ashes in Lake Michigan." And so, so it's just funny, how that generation thinks, versus, how we think. And then also, like when you talked about, people wonder why our Caucasian counterparts are ahead, obviously slavery and all that, but it's because of issues like this, right? Because I've worked in I have experience in banking, and what end up happening is someone would have a life insurance policy, won't be that much, $90,000, $100,000. They leave it to the kids split it up, and then now the kids have an extra $40,000-$50,000 in their account, find somewhere to invest it in, and now it's pushing the legacy forward, right? And so at the conversation we need to have with ourselves, with our own people, is like, okay, policy $40-$50, I'm just estimating, right, a month. Think how much we waste $50,000-$40,000 a month just on fast, just dumb Starbucks, right? And so you're consuming that monthly, right? But if you put that and put it away, so let's say you do transition on, because it's going to happen, right? You didn't invested more than more than you spent as far as that consumption every month. And so it's having that different mindset. Shout out to my wife because it's funny because we just had this conversation probably like 6 months ago, and she goes, "You need to have life insurance policy." And I'm like, I looked at, I'm like, "You ain't trying to kill me or nothing." I'm like, all the white folks, I watch
Yeah,
murder shows all the time. They kill each other for murder money and all that stuff, right? So, but it's just funny having that conversation now. But it's also mature thinking, right? Because you want
oh
to
yeah,
be
absolutely.
thinking forward, and so we
Mhm.
appreciate you just for being here and educating us because I learned a lot too. There's a lot of stuff I did know, a lot of stuff I didn't know, and so we thank you, thank you, thank you.
Absolutely. I
Any
appreciate
closing
it.
thoughts from you guys?
Rick, you have anything else you would like to talk to the viewers about?
Um, basically, I can get long-winded. I don't really want to, what I'm saying, extend it. But my thing is also what I want to talk about is like when we talk about investing, if people aren't investing, you know what I mean? I want people to think about like, just ask yourself these a couple questions. When do you plan to retire? What age do you plan to retire? How much
50.
money do you and how much money do you want to have coming in average on retirement on monthly? And then, you kind of have to work the numbers backwards. And that has to basically break down to what you're saving and what you're investing. So if we're not saving or investing, I mean, we're going to be the generation that works until we die. So I want to encourage everybody to, if you don't do it with me, do it with someone else, but do it for yourself, for your family, work on, savings, investing to figure out, what to invest in long term. That's what I would recommend.
Okay. So
Also, one last thing. I also do what's called Forex investing. So I
Yes.
would encourage people to learn about Forex and actually become actual actual traders. I want to encourage people to learn how to invest for themselves, learn how to make their own money because we work our lives, we work this, we put money in 401k, and we talked about we knowing that the market's going to crash. How are you going to prevent yourself from being part of that crash? And then, like I said, we work for the next 20 years. What if the next crash doesn't happen for 20 years and the year you plan to retire, the market crashes 30-40%? It happened back in '08. It happened to some people. They lost 50% of their life savings. I mean, some people committed suicide at that time because they didn't know how to live. They didn't know what, they worked all their lives for this. So I want to help some people, just kind of get into it. So there's a actual site I use. It's called barchart.com. With barchart.com, you can kind of look up any stocks that you want to look up. But Forex is a different animal. Forex is the foreign exchange, which actually you're working with the economies of a company. So you actually trading on the economies of a company with the foreign money. So you actually have currency pairs. You have things like indices, and then you have metals, precious metals. So you can learn actually how to trade Bitcoin and cryptocurrency and things like that and learn about them.
So how, and again, when they call you for consulting, those handlers that you put online, is those the way that they can contact you so you can actually consult them on it, give them the spiel, make sure that they're getting
absolutely.
all the information?
Yep. So I would the best thing to do is to actually set up a call on the calendar, and then we can basically kind of go from there. And then if you like, shoot me an email what you would really like to have accomplished in the call, or put it in the comments, and we can go from there. Like I said, I know a little different people have different things, so I like to start with an initial consultation, seeing what their area is needed in, and then kind of direct them that way. So.
Okay.
Definitely look forward to, working for some people and helping some people from this call. I appreciate you guys, the Black Butterfly Podcast, representing for us entrepreneurs and, Gary native. So shout out to the Black Butterfly Podcast.
Yes, sir. Yes, sir.
Thank you. I just want to end by saying, do not perish from a lack of knowledge. Constantly be persistent. And then we have to change that poverty mindset. Not saying that you don't have money in the bank, not saying that you are not earning an income from your job, but a poverty mindset is, just as Amaru said, my father said, put me in a box and bury me, but it's more so, hey, I know there's some things that are going to be, you guys are going to be left behind. I have kids, I have grandkids that are going to be left behind. We want to continue to build generational wealth. So although I'm not going to need the funds just enough to bury me, whatever that is left, you guys take it, and make sure that the family is taken care of after I pass on. I don't want to leave you guys with any debt. So change the mindset. And that is also part of the financial literacy. Derrick, we would love to have you back on just so that you can debacle credit, because a lot of people don't really know about credit, and they also don't know about business credit.
Yeah, definitely. Yeah, I would love to be back and touch on those topics because that's something I do as well and have been doing for several years. So, like I said, just kind of helping advance my people. I'm all for it, man. So any way I can set that up, we can definitely set that up down the line. Let it be back.
Okay.
Okay,
Well,
cool.
thank you again. Any closing comments, Maru?
Just shout out to my man Derrick, and shout out to just our people, right? Because we dope. We some dope people.
Yeah,
One of the things,
absolutely.
this is why this platform was created, to give our, fellow Gary people spaces like this, because normally we don't get, the platforms to speak on stuff like this, right? And so it's about
Right.
educating, pushing our people forward, teaching, holding ourselves accountable, because a lot of us be doing
Yeah.
a lot of reckless stuff, but it's also guiding each other on the right path. So I salute you, brother. I love what
Appreciate
you're
it.
doing. Keep doing what you're doing, and we will obviously have you back. And with that, we will conclude.
All
All
right.
right, man.
Thank you.
Y'all
Thanks
have a good evening.
again. You have a good evening too.
Yes, yes. Appreciate it.